China wrapped up 2024 breaking export records, closing the year with a massive trade surplus of $100 billion in December alone, and an astonishing $1 trillion for the entire year. Yes, 1 trillion with a T. That number is absolutely mind-blowing. It's the highest trade surplus ever recorded not just in China's history, but in the history of any country. No one had ever managed to post a $1 trillion surplus before. For context, the trade surplus is simply the difference between what a country exports and what it imports. And this figure gives us a pretty clear picture. At least on paper, China's trade accounts seem more than healthy. Of course, that won't stop the usual "China is collapsing" crowd, a favorite headline we'll probably keep hearing this year. But here on this channel, we take a critical look. We dig deeper instead of staying on the surface. So, let's break down these numbers and explore both the strengths and the weak spots behind them. Still, at first glance, this result is nothing short of overwhelming. It paints an economic reality for China that's hard to ignore or deny. On one hand, this record is a clear demonstration of China's export power, still the driving engine of its economy, and a reminder of the mistake both foreign analysts and some Chinese policymakers make when trying to pivot the economy toward domestic consumption. In 2024, exports accounted for nearly a quarter of the country's total economic growth. That single figure highlights just how much global demand remains a crucial pillar of China's expansion. Exports reached a total of $3.6 trillion, with an impressive 11% jump in December alone. That month became the second best in China's history for exports, surpassed only by December 2021, when the pandemic-driven boom sent global demand soaring. Another positive takeaway is that this surplus doesn't rely solely on trade with the United States. China has managed to significantly diversify its export destinations, spreading its influence across multiple regions. The surplus with ASEAN countries hit an all-time high, solidifying Southeast Asia as one of China's most important trade partners. This is a point we've often emphasized on this channel, and one you won't hear anywhere else. We've covered it in depth before. China is the main force driving development across Southeast Asia, gradually replacing Japan's influence. And the truth is, you won't find this kind of analysis easily, simply because very few experts truly understand both China and Southeast Asia from the inside. The truth is, there are barely any analysts who truly understand China. And if we raise the bar by adding Southeast Asia into the equation, well, most people are completely lost. You also won't find this kind of analysis elsewhere because, historically, we've largely ignored Southeast Asia. Yet in my own research, I've come to see it as a key region for the near future, especially in upcoming Western policy debates. Let's be honest, we ignored China entirely until barely a decade ago, right up until it was suddenly too big to overlook. And if we fail to develop any real depth in understanding the world's largest trading partner, just imagine how little we grasp about those smaller countries of 100 or 200 million people. Nations we often mix up and only know as vacation spots. The deepest insight you'll hear from the average Asia expert tends to be something like, India is the new China. That's the level we're at. Beyond that shallow take, expectations shouldn't be too high. So the real question is this: how can China be exporting more than ever? Not by selling to its usual Western clients, but by selling even more to ASEAN countries than it imports from them. Let's take a closer look at why this is happening. To begin with, Southeast Asia is simply the fastest growing region on the planet. That's reason enough to pay attention. When an economy grows by 10%, even if growth isn't perfectly linear, that means demand for goods is rising just as fast, and someone needs to supply them. Then, there's China. Despite what many headlines suggest, it's still the world's factory. And for these countries to keep producing what they now ship to global markets, they rely heavily on Chinese-made components and materials. Much of the region's boom, in fact, comes from Chinese companies literally uprooting their factories, brick by brick, and moving them abroad. But those relocated plants still buy from the same Chinese suppliers. So the result is a surge of exports from China, both during the move and throughout the production that follows. Add to that the Belt and Road Initiative, which we often oversimplify. Many of these projects are designed for the very long term. The Chinese think in decades, and they can wait. The challenge is that we rarely step outside our own Western mindset. If we pour $10 billion into Kazakhstan and see nothing a year later, we call it a failure. But a decade ago, Kazakhstan barely had paved roads connecting it to its neighbors, and trade with China was almost non-existent. Everything came through Russia, either made in Russia or re-exported through it. Now, China is Kazakhstan's largest trading partner. In just 10 years, Beijing has quietly overtaken Moscow's influence across much of Central Asia, a region that once seemed untouchable for Russia. You won't hear this in mainstream coverage. Most still repeat the same line: China and Russia are lifelong friends. Yet, through quiet strategy and soft power, China has slowly taken over Russia's own backyard. And in Southeast Asia, a similar story is playing out, this time replacing Japan's economic dominance. It's hard to understand these shifts without looking at the Belt and Road's broader logic. Even former rivals like China and Vietnam, two manufacturing powerhouses that once competed fiercely, are now among the world's most significant trade partners. So, is the Belt and Road a failure? Hardly clear, but it's far from irrelevant. And there's another layer. China often finances the very infrastructure it builds abroad. That's where the so-called debt trap diplomacy narrative comes in. But again, we stop at the headline. The bad guys are at it again. If we look deeper, we'd see something else entirely. A vast field of opportunity opening up for developing nations through Chinese capital and infrastructure. China has been steadily replacing Japan's influence across the region. To put it simply, Japan used to build a bridge, and in return, you bought a Toyota. Today, it's China doing the same. And when Japan did it, everyone seemed fine with it. Partly because, as I mentioned before, Southeast Asia never really existed in our minds. From the Vietnam War up until Thailand became our go-to destination for cheap affection, the region was a blank spot on the Western radar. For 40 years, we barely heard a thing. Honestly, we probably only discovered there were tsunamis in that part of the world sometime yesterday afternoon. It never made the evening news. So fine, let Japan have it. What's south of China? Just more poor Chinese. Who cares, right? And since Japan wasn't seen as a threat, we never criticized its strategy. Yet what Tokyo did back then was essentially the same playbook Beijing is running today. Only back then, conditions were far harsher for Southeast Asian nations. But that era is over. Japan's influence is history. China has completely taken over that space. In fact, Vietnam has now surpassed Japan as China's third largest export destination, and second if we exclude Hong Kong. That means Vietnam trails only behind the United States, a country 64 times larger. Incredible, isn't it? That story should be echoing everywhere. It's the kind of data point that deserves a full thesis, something that should be taught in every business school. How can a nation with a GDP under $500 billion be China's second largest export market, right after the US? And not just any nation, a historic rival, a competing manufacturer, another production powerhouse. There's so much to unpack here, yet hardly anyone talks about China-Vietnam relations, or who's actually driving Vietnam's growth, or the country's strategic role in the region. Few even ask why Vietnam has maintained a solid 6 to 8% annual growth rate for over a decade, even through the pandemic when almost no one else did. And of course, Western commentators, most of whom have never set foot in Vietnam beyond a boat ride in Ha Long Bay, are quick to say, "You can't trust the numbers, the government manipulates them." Or the classic, "Well, they're communists after all." But beyond that lazy narrative, Vietnam has become a spearhead of the new trade order led by China, a trend that repeats itself across nearly every Southeast Asian nation, and, frankly, much of the world. Here's something to consider. China runs a trade surplus with 165 countries, out of the roughly 200 that make up the planet. That number is staggering, especially when we remember China is already the world's top trading partner. So, is China collapsing? I don't know. Maybe they're lying, as critics always claim. Maybe there's some grand conspiracy where 165 countries, including the United States and all of Europe, are working hand in hand with Beijing, faking trade data just to make China look good. I doubt it, but at least allow me that small grain of skepticism. Meanwhile, Shanghai stands firm as the world's busiest port. You've probably heard this. 7 of the top 10 ports on Earth are in China, and the other 3? Also in Asia, and they owe their size to trade with China. Let's be honest, the future of humanity was always going to be written from Asia. That sounded like an exaggeration 20 years ago. Today, no one's laughing. The truth is, while the West stays busy bombing countries or watching history unfold from behind a muted webcam, America and Europe are fast-tracking their own irrelevance. So yes, China isn't collapsing. Not today. But the stage is shifting fast. In 2025, the real challenge isn't proving China's strength. It's learning how to manage its own fragility, because tomorrow, someone will always find a new reason to declare China's fall. The truth is, this story is far from over. There's still much more to uncover, and the next chapter is coming soon. Stay tuned for part 2.